What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. The weekend is here, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including this week. We had Google choking. We had Microsoft potentially taking the lead in the AI race, and a lot of these stocks had a massive pullback. We kick things off like we always do with Meta Platforms. Started the week at 189. This one, from a technical perspective, just hit the reverse button, down about 8.2%, finished the week closer to $174 per share. This was so obvious that I reported a sell rating on the stock on Seeking Alpha. There is always links in the description down below to my Twitter account, my Instagram account, but also my Seeking Alpha account. In the shorter term, this was a clear sell. We'll see if that continues to materialize over the coming weeks. Certainly when we get to the technical perspective of Meta, you will see that. Now, the FTC will not, I repeat, will not appeal a court loss that allowed that Meta in within deal. And that was kind of the crux of an article that I wrote on Seeking Alpha. And I talked about how I'm actually very happy for Meta. I'm happy that the court system did not allow FTC to block this deal. Within is a relatively quote unquote kind of small app maker. It was a $400 million deal. We're talking about a $400 billion plus company. And we're talking about a business unit that has year over year declining revenues and year over year increasing losses. And that's the metaverse project that Mark Zuckerberg has taken Meta shareholders down. This will likely allow Meta to continue to reinvest and acquire companies in the kind of Oculus metaverse virtual reality space. I think that will ultimately be good for Meta if this ends up being a big business for them. I am certainly not convinced of that, at least in the shorter term, and we'll see how this plays out. But it appears that the FTC will not appeal that case, and I'm glad that they lost. Meta Platforms' AI push to gain from its most valuable assets. So all of these tech companies are going to be putting the word AI into every press release that they possibly could. Now, Meta certainly has a case here, okay, because they have all your user data. They have millions and billions of users, and they have all these data points. And so if they can turn that into a product, like an interesting product, and in my opinion, a proprietary product over at Meta, then they certainly could. This is a company that could create a chat bot, maybe not one where you're asking for like world history from 1890 and write it in an essay or in a poem. You know, a chat bot that I can ask, show me my photos of my kids where they're smiling or they're outside playing. There's lots of different things, or interaction that you've had with friends over the years on Facebook and maybe Instagram and WhatsApp even, could be a valuable product. And I'd love to see what Meta Platforms produce from a product perspective from the AI space going forward. I think they're more than capable of doing that. Meta settles a lawsuit over its infinity symbol logo. So they changed, obviously, the parent company name. They adopted this infinity symbol. They got sued. Looks like that was dropped, relatively minor for Meta. The company is said to tweak their Horizon Metaverse app to keep users and let teenagers have access. So the Horizon World app, I believe, is, I've never experienced myself and maybe only seen anecdotal reports here on YouTube. It's essentially like a world where it's kind of the gateway, I think, into the metaverse, where you have, maybe your own little space in there. Maybe you hang out with some friends. Maybe it's kind of a portal into larger things into the metaverse. And it looks like they are going to give teenagers access, which will certainly open up some eyeballs, probably from a regulatory perspective at some point for Meta. They're used to that. Moving on to Apple. Start of the week at 152, basically flat from a technical perspective. We'll see that. End of the week at 151. Apple is set to face EU regulators over their mobile wallet technology. This relates to Apple Pay and the fact that it could be viewed as anti-competitive because nobody has access to the Apple Pay outside of the Apple ecosystem. We'll see what happens. I think Apple Pay is an certainly underrated technology and probably an underrated asset to Apple's business. Japan's FTC recommends that Apple and Google's App Store include third-party apps. This is going to be the story over the next, it has been the story, I would say, over the last 6 to 12 months And it's going to be the story going forward that these app stores are going to likely become under pressure from a revenue perspective and certainly a regulatory perspective, not only here in the United States, but around the world. Now, the app store growth reportedly looking muted this year. We saw a little bit of evidence of that when we looked at Apple's earnings report. That service business that just kept growing and growing and growing. Well, it's still growing, but it looks like it's starting to hit a wall in terms of its growth rate. Certainly, if you have a reversal of those app stores or you allow payment processing to flow through there, where Apple is not allowed to take that 30% app tax on every dollar that flows through there, that is going to not only mute earnings, but maybe potentially send them in the opposite direction. I'm talking about revenues. That the App Store is still going to print money, but maybe not have as strong as revenue growth. Apple Pay Later coming as soon as the tech giant pushes into financial services. So they're going to have Apple Pay. You essentially have this already. If you have one of those Apple credit cards, anytime I buy like a new phone or headphones or certainly a new computer, they basically just offer it to you for 12 months, no interest payments. So it's like it's a no-brainer. Every single time that I buy an Apple product, I'll just stretch it out over 12 months, no interest. Anytime you can get a payment and stretch it out over 12 months, no interest, I think that's a great deal for most consumers. But this is likely to expand potentially to other products as well very soon. Apple's high-end phones said to receive discounts. Am I reading this right? Are my glasses working today on a Friday? Discounts in China as retailers in China, including JD.com, are offering $100 rebates on some of the smartphones. I have not seen that in a while for Apple, showing you that you probably have some weakening demand for the phones and maybe some weakness in the Chinese economy as well. Moving on to Amazon, started the week at 103, down 5.5%, finished the week at 97.61. The company's eyeing an acquisition of Indian video streaming leader. So this would essentially put Amazon's just going to meet whatever Amazon did here in the United States. They're going to put that in a Xerox copy machine. Some of you, the younger listeners, might not know what that is, but they're basically going to make a copy of the Amazon business and do whatever they did here that worked, and they're going to go do it in India. And that includes video streaming. Maybe not everybody understands that the company owns Twitch, which is a video game streaming service here in the United States. While the product in India might not necessarily be exactly like Twitch, this is the type of capabilities that Amazon's going to bring up into India. And because Amazon basically got shut out of the country of China, India being probably its biggest growth driver, I would assume, over the next decade for the company in terms of revenue growth. And obviously, if you're an Amazon shareholder, you're rooting for that to work out. No valuation floor on One Medical in potential Amazon breakup. Obviously, we've talked about this numerous times on the show. The company agreed to buy One Medical several months ago, and obviously the Department of Justice, or really the FTC, I don't think it's the DOJ, it's the FTC, is going to try to put a brake on this and try to pump the brakes on this. We'll see what happens. Obviously, you've been following this channel. You understand that those things play out over a long period of time. Moving on to Netflix, started the week at 367. And I need some eyeglass cleaner. It's the first time I've seen this stock go down in a while, down over 5.5%. Finished the week at 347. We finally hit some resistance levels for Netflix as the company is expanding their account sharing approach to 4 other countries. So they're not going to let you share accounts over at Netflix, and we'll see what that ends up doing. Some analysts believe that that is going to add to revenues and add to user and subscriber growth, but there are some surveys that show that 62% of Netflix password sharing users would actually stop using the service. I don't believe that. I think it's really easy to click on a survey saying, well, if I had to pay for Netflix, I'm not going to watch it. But then the show that you're excited about comes out with a new season or 12 episodes that you can binge watch while you don't have anything else to do. Well, you're probably going to go sign up for Netflix and watch the shows. But we'll certainly see how this plays out over a longer period of time. Moving on to NVIDIA, started the week at 210, was down about 4.8% today, but the stock still was up over 1.15%, finished the week at 212, certainly reaching overbought territory. We'll talk about that when we get to the technical segment. Now, a lot of people might not remember NVIDIA was trying to buy the company called ARM, and the CEO of that company says the chip design company is committed to an IPO later this year. I believe ARM is owned or partly owned or maybe wholly owned by SoftBank. and they are looking to IPO ARM. I believe NVIDIA had agreed to buy ARM for $50 billion, I believe, at one time. And so we'll see what ARM ends up going public at. But that would add another quote unquote chip stock that, depending on the financials, depending on the valuation, could absolutely be investable, I think. And so we've got AMD, we've got NVIDIA, we've got the semiconductor ETF, you've got TSM. I don't know how you feel about Intel. I think you guys know how I feel about it, but ARM could potentially be another one in that mix. Moving on to Google, start of the week at 104 and ended the week down 9%, down to 94.50. I reported a video when they did our earnings 2 weeks ago, and I questioned, maybe we might need some new leadership over at Google. And this week we saw why. The stock slid 9% because Sundar Pichai is not the guy. He's not the guy. He's not a flashy guy. He's not a marketer. And Google has spent billions. We're talking about billions of dollars, and spent years developing AI technology. In fact, a lot of their technology is actually being used by OpenAI, which is now wholly owned or partly owned by Microsoft. A lot of the capabilities of OpenAI was actually developed by Google. And then so we were expecting Google to have a press release this week to unveil something new, something that investors could get excited about. And they absolutely fell on their face. That is leadership, folks. And in this case, that is a lack of leadership. I still will give Sundar Pichai another 11 months to see if he can roll out something in the AI space that catches the imaginations not only of consumers, but investors as well. Otherwise, he needs to get the hell out of here. We could have the line out the door of capable CEOs for Google that could run this company and run it very well. And if Google had somebody in charge that was charismatic and could market a product, not only market a product, invest billions of dollars on it over years, and then actually ship, we're not even talking about the product. We're not even talking about shipping the product. We're talking about shipping a beta version of something you've spent billions of dollars over the years. The CEO of Google couldn't even do that this week. And so, yeah, the stock really was down 9% because the CEO proved he was completely incompetent this week. Now, other people at Google, I think, are feeling the same thing, as the Google Labs VP is exiting to form an AI startup with a former Salesforce co-CEO. And so both of those guys leaving very high profile positions at very high profile public companies to start their own startups. It could tell you the story of what's going on out here in Silicon Valley, that you've got people at the top of these companies that really aren't doing much and not inspiring a lot of the employees. So a lot of them are deciding to leave and start their own things. Now, Google's speed to market obviously is going to be critical in this AI race. They've invested the money. They have millions and billions invested in this. A lot of the infrastructure, again, over at OpenAI was actually built a lot on the backs of Google's research and Google's products. Google has everything at its disposal except a CEO that can ship a freaking beta product to have people be wowed and impressed with. He couldn't even do that this week. We'll give him a second, a third try, I'm sure, as we go through the year, but I am losing patience with Google. Moving on to Microsoft, start of the week at 256, and here's the dichotomy. You've got Satya Nadella just singing sweet music to investors, and they're loving what they're seeing, and when they're loving what they're seeing over at this company, up 2.6%. And I know 2.6% gain in a week is nothing, but when the fact is Google is down 9%, being up 2% is like you might as well be up 200%, as Microsoft finished the week closer to $263 per share. And the company passed that $2 trillion market cap as it unveiled an AI-powered version of Bing and inside of its Edge browser. I do a lot of advertising on Bing, and I noticed that my traffic was like cut in half. So they're definitely making some changes over at Bing. And that is one of the, again, we'll give Google the benefit of the doubt. They can't move as quickly over at Bing, okay? They can't slash, advertising clicks over at Google 20, 30%. I mean, we're talking about tens of billions of dollars over the course of even a quarter. And so Microsoft can move a little bit faster. I advertise actually more on Bing than I do Google. And I noticed that literally the day after they made these changes on Bing and they rolled this out, my traffic went down big time. And so we'll see what happens going forward from that perspective. But Microsoft is moving very quickly, and it's obviously a very capable and worthy competitor to Google, and they couldn't take the lead necessarily in terms of a search engine or necessarily a browser. But if Google does not move fast enough, a company like Microsoft is certainly capable of changing some things. Microsoft-owned GitHub is said to cut 10% of the staff and go fully remote as we continue to see cost cutting along tech. And I like this. I like the speed that Microsoft is moving at. They're moving like a nimble tech startup, and it is surprising and refreshing as an investor. And I think this is going to be one of the most interesting stories to play out over the next 12 to 24 months, kind of that Microsoft versus Google battle. Activision falls on concerns the UK may oppose that Microsoft deal. We have a headline like this every single week, and we're just going to let it play out. I thought it would be approved by now. No, it's just going to continue to get stretched out and stretched out. Moving on to Tesla, start of the week, we'll call that 195, up about 1%. We'll call that finishing the week at about 197. This is after the company is unveiling a new, quote, master plan coming out March 1st. This is what quote unquote leadership. And I know a lot of people look at Elon Musk and look, some of the things he says, some of the things he does certainly could be questionable from a CEO perspective, from a shareholder perspective. But this is marketing, okay? This is how you market your company. This is how you market a stock. And now, look, we'll see what happens on this master plan. It could end up like a big dud, like Google's unveil this week of their AI technology. It could be transformative. It could catch the imagination, again, of the investor community of Tesla bulls out there. We'll see what happens. But Elon Musk, if he was running Google stock probably would be up like 30% over the last week or two, because this is what you want to see out of your CEO. Tesla's autopilot cleared by the NTSB in involvement in a tragic, fatal Texas car crash. These car crashes often catch news when it's a Tesla, and I would say the vast majority of the time, sadly, and I say sadly and regrettably, the driver is at fault and not the car or the software. After recent cuts, Tesla lifts their Model Y prices here in the United States. So they cut the prices. This is also why I'm really respecting Microsoft's leadership right now. And I'm respecting Tesla's. Okay, they're moving very quickly, okay? They saw some demand maybe slip a little bit. They cut the prices of the Model Y. Then they say, oh, wait, no, we cut them maybe a little too much, and we raise them. We react very quickly over these companies, and that is what I like to see. Google is moving at a snail's pace. Tesla is grabbing market share in China after price cuts. That is spurring Tesla stock to continue to move higher, because as Tesla goes, really their China business has to go as well. Moving over to the technical segment of the show, we finally saw the S&P 500 kind of reach a area where it saw some resistance, and this is kind of this is what we've been waiting for. And so don't be alarmed if you're one of these mega bulls out here. There's absolutely nothing to be alarmed. We've made a series of higher highs. We confirmed it this week. Okay, we pushed up over the highs that we made back in December. That is good from a technical perspective. We talked about numerous times here on the show. This was going to have to give up. It just wasn't just going to keep going straight up in the air. In fact, if it did that, I would have sold my entire portfolio. It gave it back. And now we're looking how deep this pullback is going to be. The first stop is likely down here at about 39.50. If it stops there, I would be elated, because this is the start of higher highs, higher lows. This is how you start an uptrend. I mean, the textbook example of this is an NVIDIA, where you had this steep downtrend and then whoop, you snap back and reverse it. And so we're looking for the S&P 500, virtually all these stocks, to do that type of thing from a technical perspective. Really, the area to watch, though, with the S&P 500 is further down here at about, we'll call it 3,800. We're rounding numbers off. But you would not want to get below these lows. You get below these lows, and yeah, you're almost guaranteed to, at the very least, retest the lows in October. More than likely, you're going to push even much, much lower than that. Probably retest a new low down south of, I would assume, 3,500. So some key technical levels that everybody will be watching over the next couple of weeks on the S&P 500. First at about, we'll call it 39 and some change, and then lower than that at about 38. and some change. Moving over to Meta, this one looks like it's going to fill the gap. So we talked about on the show, it made this large gap. Meta made this large gap after earnings, gapped up. This is where you sell. I talked about it here on the channel. I published an article saying this is where you sell. Now, look, this stock could, just be taking a small breath and could reverse and go higher. I don't know, but I'm glad now sitting back that I sold this. I think I sold it at 187 or 188 last week. It was pretty much clear as day that if this stock lost momentum, it had a very high probability of filling this gap. You fill this gap, you're going to go from like 174 down to 154. But I would not be concerned. If you're bullish Meta or you're trying to accumulate this stock, this is exactly what you want to happen. You want this gap to fill. You keep moving back down below that. This stock could pull all the way back to the 120s, and it's still making higher lows. It's still essentially confirming higher highs as well. It's still not tested overhead resistance up here at 220 and higher than that at 250. It's just taking a breath. It was completely overbought a little bit, certainly maybe more than a little bit oversold over the last couple of weeks, and you had this massive rally. It's going to give that back. We'll be monitoring Meta as we do every single week here on the show. Moving on to Apple, definitely had a little bit of a V-shaped recovery. It is pulling back to an area of support here at 150, and that's kind of a crossing roads for Apple. You slice through 150, you're probably retesting back down here south of 140. I'm not convinced this one's out of this kind of broader technical pattern, which we have marked down here at kind of a purple line and the upper red line. I think, you break through 140, you're making a new low on this one down here at the 120s. I tell you what, if they're discounting the phones in China and they're thinking about slashing the App Store's ability to charge that 30% tax, this one could retest a new low, but still obviously a great company. Moving on to Amazon, this one has pulled back into our green box. We thought for sure it would back test to this black line. It looks like to me it wants to go a little bit deeper than that. We thought maybe you could stop at 100 or so. I mean, you're still there from kind of a rounding perspective. You're here at 97. This one looks like it wants to go a little bit deeper. As long as you don't get much deeper than about 85 on this one, it is looking like it could be beginning some kind of reversal. But again, this company from a fundamental perspective has to start nailing some things, has to start cutting some cost, has to start turning a profit, maybe see a reacceleration in AWS, and then maybe that stock can start to reverse. And I tell you what, once the stock reverses, it could have a very nice ride. We'll see what happens. Moving on to Netflix. This one finally found area of resistance up here at about 370. We'll call it maybe in 375. Pulled back. It's still up there. So we're not here set to call that was the top in Netflix, at least in the shorter term. If this one continues to pull back, I wouldn't be concerned. I'll pull back to 300, in fact, or 300 and some change would actually present a buying opportunity. I mean, I tell you what, you could pull all the way back to like 230 on this one. It would still technically be a buying opportunity, although you'd clear out some technical positiveness if you pull through these areas of about 300. Pull back to 300 if you're trying to accumulate this stock is an area. Again, you have a gap up here, and I think if this upward trend in Amazon continues to play out for the rest of the year, this gap is likely to be filled. So you're coming up to 500 on Netflix if the momentum stays in that one. Moving on to NVIDIA, this one, just lost a little bit of ground. It is in this trend. I want to delete a couple of things we'll put these back on maybe by next week, but I want to clear some of this out so we just have a very clear picture of where NVIDIA is right now. And so look, yeah, the stock was down 5% today, but this is just a beautiful technical pattern. We're here at the top of the range. We are very likely to retest kind of the bottom of the range. That would take you south of about 175 on that one. There's your buying opportunity for NVIDIA. You come a little bit lower than that, I wouldn't like to see it, but technically you could come down into like the 150-ish range and it'd still be okay, but I'd like for it to stop right here at 165 and do a U-turn. I'm not talking about next week. I'm probably talking over the next couple of weeks. Now, this company does report their earnings. It's the last of this company to report, and it looks like we're going to get those on Wednesday, February 22nd. So we're talking about 12 days away. There, I probably wouldn't be excited about getting into this stock before, 12 days from earnings, but that could be the catalyst to move this one one way or another. Moving over to Google, and you see the destruction in the stock. It was up here earlier in the week at 107. And look, it was at an area where we thought it would get rejected. It didn't quite get to the top of the range. You would have liked to see this one get all the way up here. All this top line is probably not drawn in here perfectly. You certainly could shallow it out at this point to kind of meet that line. You would like for this one to stop at 100, but after that botched attempt to show off their AI developments, which was nothing basically, it pierced right through this. My guess is you're probably coming back down here to about $90 on this one. This is where you continue to add Google. I know I'm bad talking this company, and I've been very critical of this company, but yeah, I'm going to buy more of this. Okay. Maybe not in my retirement account, but my kids, got a bunch of money in theirs, and yeah, we're probably buying that one down at those levels. Moving over to Microsoft, looking just so good. Looking like NVIDIA from a technical perspective. You're making higher highs. You confirmed them. Yeah, you pulled back, but you're confirming it with higher lows as well. This one looks like it wants to walk back to at least this area at 250. You walk deeper, doesn't matter. You come back down here at 230. I am absolutely 100% buying this stock. You back test to 230. That's your spot. And look, if you're wrong, okay, and you got to understand, you can be wrong from a technical perspective. You can be wrong as investors. In fact, you're going to be wrong a large percent of the time. If you're wrong here at 230 and it makes new lows, the new lows are down here at 214. If you can't watch a stock go from 230 down to, we'll call it just 200, like if you can't do that, then maybe you really shouldn't be investing in the stock market, because it's all about risk reward. I like this stock. You back test to 230. It could get a bounce there, retest to new highs, probably back up over to a 75 or higher. Moving on to Tesla. I mean, this looks like my son was practicing his V's in his class, and that's what you made. You made a V-shaped recovery, and anytime you make, there's like shallow V's, and then there's like the steepest of V that you possibly make, and that's what Tesla was on. And, look, that's leadership, okay? They finally got Elon Musk paying a little bit more attention to what's going on over there. They made some price cuts. They made some tough decisions, and, look, that's what happens to your stock when you've got a leader running the thing. But from a technical perspective, this one's way overshot, and so you'd expect some kind of pullback. The area of support that you'd love to see hold on a pullback, if you have a down week next week, is 178. You don't hold 178 in Tesla. I'm not breaking any news here. Tesla is like extremely volatile. So you could go from where you're at and then somewhere down here into, we'll just call it like 115 or so. You could have a 40% drop in this stock over any length of time, and it still could be trying to break out of this downtrend. Now, more ideally, you want this one to actually keep pushing higher, push up here another 30%. You actually need this stock to go up a 30%. If it goes up 30%, it's still in a downtrend. You really need to get all the way up above 309, 310, probably 315 on this one to convincingly get it out of this downtrend. That's another 67% move. If you don't like volatility, I would not invest in Tesla stock. And what I do advise for most people is to skim some profits in these types of stocks. I would do it in NVIDIA. I would probably do it in Netflix. And I would certainly do it in Meta as well, as these companies have proven their stocks far more volatile than most. Hopefully, guys, enjoyed today's video. Enjoy your weekend. Be safe during the Super Bowl. Catch a ride if you drink a little bit too much. And I hope whatever team you are pulling for or you're betting on comes out on top. Hopefully, you guys have a great weekend. Good luck with your investments.